Good afternoon. Thank you for watching. My name is Mark and welcome to this latest Lamudi Webinar episode with the title Investing in a Bear Market in partnership with RLC Residences. RLC Residences is part of Robinson's Land Corporation, who are one of the Philippines' leading real estate companies and most reputable developers of mixed-use properties, office buildings, residential condominiums, as well as land and estate developments, including socialized housing, and in key cities and urban areas nationwide. RLC also leads in the development of and operation of lifestyle shopping malls and hotels. In today's episode, we'll take a look at the impact that 2020 has had on the property index within the Philippine Stock Exchange to examine how the behavior of strong and stable real estate developers can have an impact on wider market sentiment. And we'll be looking to identify opportunities and reasons why investing in a bear market can help to bolster your wealth portfolio in the long term. For today's session, I'm joined by Rommel Rodrigo, who carries more than 20 years experience working in the equity market and has spent the last 3 years at Robinson's Land as Head of Investor Relations.
Hi, good afternoon, Mike.
Welcome, Rommel. Hi, Ron, good to have you here. Alongside Rommel, we have Justin Dela Cruz with 8 years experience as a real estate broker, born from experience in investment banking, after a spell in business development at Robinson's Land. Welcome, Justin.
Hey, Mark. Good afternoon. Great to be here.
Ron, to get us started, please, could you give us an idea of the weighting that the property stock index carries in the context of the Philippine Stock Exchange?
Yes. Okay. Thank you. If you look at the property index and also the component of it going to the PSEI or the Philippine Stock Exchange Index, it's I could say it will be the pillar of the PSEI or the Philippine Stock Exchange Index, given that at any given time, in terms of weighing, we have 4 property names there in the main index, which are, you have there SM Prime, Ayala Land, Mega World, and As RLC. So this is the main pillar for the index. And also, if you look at those names, these are directly correlated to the domestic economy.
How did this fare against the other key sectors of the PSE?
Well, if you look at the property names, given the pandemic, most of them are the ones that are really badly hit, or in terms of the share price movement, we were the one that were badly hit, and I think Robinson's Land also, given that we're looking at the index now, or our share price year to date, we're down 40%. But the good news is that if you look at from March up to now, October, we have slowly gotten some of the lost share price. So, which is also for us, it's a welcome news. In fact, if you look at today's share price, we are up 6%. This is given that the domestic economy, as what the government mentioned last, I think early this week, that they will slowly reopen the domestic economy, and that's a welcome news to the investors.
Okay, thank you, Ron. It was reported that I think in the first 6 months of the year, it's been a challenging year for all sectors, but the property index tumbled almost 27% in the first 6 months of the year. On the face of it, that sounds like a negative statistic, but I wonder how does that fare against the other sectors within the exchange, and perhaps there's a positive spin on that.
Well, I do think that the stock market is basically a barometer of overall sentiment. So it's a barometer for the sentiment of the general public, the consuming public, but also of businesses. If we say that the Philippine stock market over the previous months, we've experienced a drop, for example, with 29% or so, I think this is to be taken into context versus what we had previously in the long term. If we would recall the previous downturn that we had, which is around the 2009, 2008, around this period, we had even a drop that was much more deeper, much more deep than that, to around the tune of a drop of 39%. But then we still recovered from that moment, and in fact, that recovery took in a span of around a year or so, and from then on, it's basically a ride going up. So my thinking is, even though we had a significant drop, and that sort of reflects the sentiment of the public being negative, and at the earlier days of our quarantine, it was really covered by much fear. At this moment, we know much more about the virus. We have our treatment protocols. We have our economy slowly recovering. So I do believe that soon enough, as a reflection also of the general improving sentiment of the public, that the stock market will also improve.
Okay, thank you. I had a look at both JG Summit and RLC's half-year results, and understandably, as JG Summit, there have been recorded losses for the year, mainly driven by the travel and tourism sector and also petrochemicals. But interestingly and more positively, there was a 3% increase in revenue growth for Robinson's Land Corporation. And that increase is driven by an impressive 66% uptick from the residential division. What have been the kind of key drivers for this growth, do you think?
Okay, one of the main key driver here is that we change or we adjust the accounting treatment for our residential sector or our residential business. So before, we used to recognize revenue on the residential based on the 15% POC. But starting this year, we now started to recognize revenue on a 10% percentage of completion. So that really jumped your revenue and really contributed to the RLC revenue as a whole.
Okay. So the residential division then is a key pillar then to the stability of the overall stock price for 2020. Has that had a significant impact on the wider index from a residential perspective?
I guess, given that the residential component or business unit accounts for 30% on any ordinary days of our revenue, but this year, 2020, it accounts to almost 50% of our revenue. So there's really a significant contribution from the residential sector, or sorry, business units.
Okay, fantastic. I mean, looking at our title, Investing in a Bear Market, Investopedia defines a bear market as a market condition in which prices of securities are falling and widespread pessimism causes the stock market's downward spiral to be self-sustaining. As investors anticipate losses in a bear market and selling continues, pessimism only grows. Not the most positive of statements. But as with most things in life, there are usually opportunities to be had. What opportunities are there in your experience during a bear market, and what advice would you have to anyone looking to invest now?
Okay, as you can see, this is a perfect opportunity for any investors to get in, given that all of the share price has been really depressed because of the current pandemic. This is very ideal for any investors that are looking into getting into the market. I would say that for me, if I'm going to invest, this is not the right time for you to invest. Let your money work for you and not you work for earning money.
And what makes property stock, a more attractive investment in a bear market compared to other, perhaps industrial stocks, tech stocks, for example? What would be real estate's pillars for security?
Real estate stock or real estate is a proven investment already. not only as a hard investment but also as part of a stock investment. These are foolproof investment that we have seen in the past. If you look at the chart back in the 1990s when the Asian crisis, share prices has really gone down also. But if you look where it is now, 20, 30 years ago, it has really risen. For example, if you look at Robinson's Land, it has gone up by more than, to some extent, 500% since 2000. And then right now, we're just hovering at around 300% return if you have invested back in the Asian crisis. So I would say it's a really good investment. It brings also the brick and mortar investment, because as the company evolves, you would also see a lot of development that has been carried by the property companies. So it's really a good investment.
Okay, thank you. Thank you, Ron. Justin, I wanted to bring you in on this. Do you have any advice for people looking to invest right now? Anything to look out for in terms of stock investments?
Yes, and I'd actually like to add to Mr. Rommel's points, because he did raise a few good ones. He used the analogy of if there's blood on the streets, then that's the best time to invest. Myself, my analogy is if you're already at the bottom, there's no way to go but going up. So I think when you're in a bear market, then basically your upside is really there and it's really present. In fact, I wouldn't really say now that we are in a strictly bear market, because if you look at all of the economic indicators, from job generation, from OFW remittances coming in, the level of industrial activity coming in, we're actually a bit in a track already going to recovery, but we're not there yet. We're still at some distance from recovery. So I think especially for the previous months who have been waiting on the sidelines, trying to see that the markets would still go down, finding more good deals. I think really time is now, because from here on out, I think the direction is really up. Of course, there's a possibility that, like what's happening in Europe, that we have their second wave. But now that we know more about the virus, now that we're slowly opening up the economy, I think even if there's another large hit, I think we would be more prepared this time. So I think it's good to invest now. As to why investing in Robinson's Land, Mr. Rommel also mentioned earlier that whereas compared to last year, residential division as per the account of revenues in RLC accounted for around 30% or so. Right now it's at I also look at the quarterly reports. Now it's at 50 to 51% of Robinson's Land's revenues are for residential. And I think that's really positive, because residential generally, not just in the Philippines but anywhere part of the world, is really seen as a defensive asset class, especially with this pandemic. In that even during this pandemic, people really still need to have roof above their heads. And right now, of course, we have a lot of people going to the work from home regime. Of course, now the home is much more important than it was before. And in fact, you could also classify residential as sort of a being drawn from pent-up demand. That means the demand, or whatever hasn't been bought before during the strict portions of the pandemic, would be executed as purchases at this time around. So I think with it's really an upside that Robinson's Land's revenues is at 50% for residential. So moving forward, I think now that we recognize that, I think there's upside potential basically for the stock.
Thank you, Justin. Some really good points there. Certainly, a defensive investment in residential real estate. It's also a defensive stock as it caters to that crucial human need, which is in very high demand in the Philippines right now. So you've mentioned there that we have, I think, stabilized and questioned whether or not we are in a bear market at the moment. And I think that's something that I was looking at while I was putting this session together. And certainly both RLC and JG, the stock indexes have significantly stabilized over the past 3 months. And I saw a recent report from Reuters that highlighted RLC as one of the top index gainers over the same period, gaining almost 5%. So you've kind of, I guess, specified that now is perhaps the right time to buy. What concerns would you have if you say now is the time to buy? What considerations would you be making or preparations in the next 6 months? I guess that question to Ron or Justin.
Okay. I think if you're looking of investing in property names, you have to look first on the fundamentals of the company. So how strong, how foolproof are there moving forward. And these are also the qualities that RLC offers to you. So this pandemic will go away probably in the next few years. And what Provinces Land offers is that we are here in the long term. We have our residential division. We continue to provide a lot of services and also a lot of asset class in terms of our projects. Right now, we are now rebranding our residential into a more cohesive brand rather than a multiple brand. So these are the things that I guess for any investors to look into is to have a very good and solid fundamentals. And then secondly is if you have also to look on the financial. So if you look at RLC, I think we're the lowest in terms of the net gearing. For the first half, we have a gearing of 0.33 times. I think that's one of the lowest in the property sector. This shows also the solid fundamentals of the company. And this will carry us moving forward also for giving more projects and available projects in the future. So I think those are the two key aspects that you have to look into if you're investing.
Sure. So solid fundamentals and a long-term strategy.
And also financially sound.
Sound, yeah, stability and security. You mentioned, Ron, just now a 500% increase since the year 2000, and I think RSC posted a 3-year high in January of this year.
Yes.
You also mentioned the previous recovery. Actually, Justin mentioned the previous recovery from the last financial crisis only took around 12 months. How do you see the recovery now looking into 2021? And do you think it's going to be 12 months or less or potentially longer? How do you see the next 12 months unfolding?
Okay, that's a hard question actually, but a very good question. I think if you look at the Philippines, I think it would really we had to reopen the domestic economy. That's the first start for us to really move forward. Currently, there are mobility restrictions. There is still no mass transportation. So people cannot still go out there. They are still afraid to go out because there's still no vaccine. But I think what the government has to do is to slowly open the domestic economy, and that will really help not only the property sector but the whole economy as well, and very particularly also our company, because we also have our mall operations. So a big portion of our mall operation is heavily dependent on the foot traffic.
Yeah.
And then with regards to our residential division, I think one of the key here also is that we were able to innovate. There is a lot of digitalization that we have innovated to cater to our customers, maybe within the mall or also within the residential division. So it also fast-track a lot of the online projects that we have, and that I think this is also good for the company moving forward.
Great stuff. How about you, Justin? How optimistic are you that we'll see a V-shaped recovery as you quoted for the last financial crisis?
Well, it's interesting. I've been listening to some of the international news last week, and several sources have actually been reporting that the recovery is going faster than they expected. So I think, at least from a general global view, global trade, global economic activity is recovering faster than they had anticipated months prior. With regard to here, I think there's a degree of optimism as well as to the vaccines coming in. I think that is one of the potential upsides in terms of at least sentiment, generating positive sentiment for the stock market overall, and also specifically for property stocks. That if the vaccine does arrive and it arrives at the manner that helps people get to move around again, that all of these mobility barriers are removed, then I think that will generate economic activity that can substantiate and maybe a higher level for the stock market. With regards to RLC and RLC Residential specifically, I think to the same point that Mr. Rommel had mentioned earlier, we look at the fundamentals. And one of the fundamentals that we look at, that I advise clients, is that we look at one key facet of the economy, which is job generation. In this time, during this year, we saw the highest unemployment rate that the Philippines had in several decades. It's almost 20%, negative 20% of unemployment.
Mm-hmm.
So, but what we also do is that we monitor cities in which you have new job listings, because job listings is basically a forward indicator. And if you have several markets that post a large volume of job listings, that means that the companies there, the markets there are doing quite healthily. And job listings will eventually turn out into jobs. Jobs will turn out into incomes, and then incomes will turn out into investments. So what I'm quite keen about Robinson's Land is that it's actually exposed to certain key cities in which our group has monitored increase in job listings. For example, one city in which we monitored a huge increase in job listings is Mandaluyong. We've seen that job listings over the past month has increased by 27%. And one of the projects in Mandaluyong that Robinson's Land has is Gateway Regency Studios. We've also noticed a similar level of increase in job listings in Cebu, in Antipolo, in Quezon City, in Pasig, in Taguig. Double-digit increase in terms of new job listings. And in all of these cities, you have basically residential developments where Robinson's Land is basically situated and has a certain market. So I think moving forward, if you say that job listings will eventually turn into incomes and to capital investments within the next 6 months, I think these signs are basically fundamental factors that I think would generate optimism for the RLC stock.
Really insightful, Justin. All positive indicators. Any particular trends or were you looking at particular sectors for these jobs, or is it just job postings in general?
Well, of course, we'll drill down further to the data. What we've seen is a lot of these new job listings are in the IT sector, and during this pandemic, the IT sector, the BPO sector, is the quite resilient sector basically. Because everyone still needs to work at home or work wherever, but still have a way in which they can communicate each other and also lower costs. Other than that, I've also seen from the data a lot of job listings from the industry, basically manufacturers, even some government jobs. Actually, surprisingly, I've seen several listings from local governments and local government agencies. So that is interesting. One thing that I didn't mention, by the way, in which I think would represent a huge upside for Robinson's Land, is that when we monitored the job listings over the past few months for in San Fernando and Angeles, the job listings the increase was basically phenomenal at around 70 to 80%. And of course, we do know that Robinson's Land has exposure to that area because they're part of the Clark conglomerate managing the airport, and you also have the 200-hectare potential development in that area. So I think if you're looking at the long term, and of course when you're thinking long term, you're thinking beyond just the pandemic, then I think the signs and signals are there that investment into these areas is positive. And RLC as a stock, I think, will also be a beneficiary of that.
Fantastic. Thank you, Justin. Just a final look. One thing that we've not touched on already is the new investment vehicle for real estate, and that is REIT. We've seen one posted this year from Ayala. I'm wondering, Ron, is this something that RLC are looking into divesting and offering these stocks on the stock exchange?
Do not have to maximize the value for the retail. So one of the very stable business unit that we have is the office. So we're looking it to be listed probably next year or mid next year, and we're looking on some of our assets. Especially in the office asset, and most likely it will be ranging from around 1.5 to 2 billion US dollar in terms of the REIT listing. Can you imagine that market? It's around 2 billion, and currently our market capitalization currently is around only 1.5. So it will really unlock the value for Robinsons Land in terms of this REIT listing.
Very exciting news. I'm wondering, is that has that been prioritized due to the pandemic? Has the pandemic influenced that decision in any way?
I think so, because as I've mentioned earlier, if you're going to do a REIT on the retail, you cannot maximize the value. Probably at any given time pre-COVID, and this is just my view, given that the Philippines is very mature when it comes to mall operation. I think the cap rate there will be around 5%, which is very high. But given this pandemic, I mean, if you're going to do a REIT on the retail or a mall, probably that will be around 6.5 or 7. So you cannot maximize the value that you can offer. So the best way for you is really to do your most stable business unit, which is the office. And we're looking at a very comfortable and in terms of the cap rate.
Fantastic. Thank you for sharing. Justin, what's your view on the opportunities of REITs in the Philippines?
Well, REITs is of course a very welcome development, and as we all know, that has been in the making for more than a decade now, and something that we very much need to catch up to other markets, to Singapore, Malaysia, and the like. I think REITs, a REIT by Robinsons Land would be welcome. Basically, REITs would liberalize capital so that people who once upon a time were not able to invest in real estate because of the high capital entry requirements now would have a chance to participate in the kind of incomes that are generated by these real estate assets. Offices in particular is something that I think would be healthy in the months to come, certainly in 2021. As we have social distancing requirements, basically you would have companies that would require more office space. At the same time, since you have other countries around the world looking for ways in which they can minimize cost, the BPO sector in the Philippines would basically be a beneficiary of that. And that provides an impetus for them to expand. So certainly, if we produce a REIT that is towards this more stable office market, I think buyers of this REIT that RLC might release next year would of course be benefited by that.
Okay, thank you, Justin, and thank you, Ron. That brings me to the end of my my line of questioning, and thank you for your insights and your optimistic outlook. It does sound that the market has stabilized, and that anyone looking to invest now, that the opportunities are there, particularly with regards to real estate. So thank you very much for joining us, both Justin and Ronald.
Thank you.
And of course, thank you to everyone for joining us. Thank you to everyone for tuning in. Please feel free to leave your comments underneath the video, and we'll see you for the next episode. Thank you very much.
Robinsons Land Corporation, one of the largest real estate developers in the Philippines and a subsidiary of the JG Summit Holdings Incorporated. Through the years, RLC has established a name in the real estate industry as it remains on top of the game in laying out the most well-designed and exceptional lifestyle spaces to the market. Its wide array of prime residential developments across the country has inspired many individuals to explore opportunities that provide a rewarding lifestyle experience. Being one of BCI Asia's top 10 property developers in the Philippines, RLC Developments have been highly regarded by prestigious international and local property award-giving bodies. With close to 3 decades of experience in property development, RLC has made a legacy that is strongly associated with good value and high-quality developments that our employees, customers, business partners, and shareholders can be proud of. It has evolved into a property developer that continues to draw interesting blueprints of fresh concepts that go beyond the ordinary. Concepts that have the power to make lives anew. Concepts that create a sense of fulfillment to families, professionals, and young investors. In the years to come, RLC is envisioned to reach greater heights as it continues to expand its widespread portfolio of innovative developments that have made a big impact in the lives of Filipino families. We are RLC. Your dreams, our foundation.